Morning, everybody. How are you all doing? Morning, Wozciak, Dennis, Danny, Barry, Joe. How are you all doing? Morning, morning, morning. Happy Thursday. Euro rate day. Should be a good one. Just quickly before we start, we got some movement on the indices this morning. Very quick move down on the FTSE this morning, pre-market. Big sell-off started pre-market today. A little bit on the DAX as well, not quite as big though. So very big, fast drop FTSE this morning again. We've obviously got a gap down as well situation in play here. This pre-market came up and filled the gap. However, I never trust pre-market data on the FTSE because the exchange is actually shut. We don't have electronic pre-market trading. So this is a gap down that is formed and running already this morning. So quite a big bear sentiment in the FTSE today. So we'll see where that one goes. But if you took the pre-market, you're in. The opening range looks like it's going to be fairly wide today. It's going to be too big actually to trade if you're not in the pre-market. So if you're trading SIH, that is. But yeah, big moves. Morning, everybody else that's come in that haven't known. Well, no one else has come in. Same people. Hello again. Right. So this morning I'm running SIH. I'm running ORB V2 here. Over here, I'm running ORB V3, which we're going to look at in more detail today. So this is the multi-instrument variant of the opening range breakout strategy. So this is running on the DAX, the NASDAQ, the Dow, and the S&P from a single chart. It's not running on tick. Does that matter? Don't think it does. So I'm testing that live this morning just to make sure the functionality works. All the back testing I've done with it has been very, very good. I mean, it's running live here anyway. It's the same strategy, just different tweak on it. But it's running here, obviously, and it's absolutely killing it at the moment. But OLB is very good at the minute. So yeah, we're going to go through that in a minute, and going to look at applications in forex for this because it's this variation that I've built is not time-based; it's volume-based. So it works in a different way. I went through it yesterday. It's just taken 2 entries, which is great. So we've got a range there on the DAX. I should have this running actually on something that isn't the DAX, just so that I can make sure it is actually working on the instruments, not the actual chart it's working on. So yeah, it's just gone long on the DAX. So this variation basically works on volume. So it's actually just a normal breakout strategy. I'm calling it ORB V3 at the minute because it's based on the opening range breakout strategy, but it's nothing to do with the opening range. It's to do with range in general. So it is something that can be applied to forex. If you're in the live rooms yesterday, I whizzed through a quick test while we were talking because somebody, I think it was Mumo, asked if he's having success with FX with the SIH at the moment. So I just literally chucked it on the pound US dollar and it killed it. Never tested it, haven't optimized it. It just started trading ranges. So it's literally, it's momentum. Trades momentum breaks. So yeah, so we'll have a look at that in a bit more detail. It's just flying off to a $400 profit. It's just taken that break long on the DAX, which this one hasn't, because the range is not right. That's interesting. So we just quickly check the settings on this and this. Interesting. One of these has taken along and one of them hasn't. different brokers. Sorry, I just need to quickly just check this. Just want to see why this is doing this. 844 on the DAX. And 815. There you go. So range on Global Prime this morning is 845. Range on Robo Forex this morning is 815. One of them is within parameters. One of them is outside parameters. Interesting. Anyway, forget all that for the minute. So we'll see where we go with those. So quickly looking at news today. So morning, Chris. Morning, Mark. Obviously today is crux day for the euro, or crunch day for the euro. It's just going to be euro mayhem today. We've got the Euro summit all day. So basically all the European leaders are meeting to decide what to do about America, what to do about Ukraine, what to do about funding for defense spending, and what the hell they're going to do about being their own continent again with no backup from anybody. This is going to be a massively important meeting. Quite what's going to come out of it, no idea. It's one of those kind of world-changing events that you just have to sit and see what happens. I don't know how news will get leaked. I don't know whether there's a press conference after. I don't know what's going on with it. But obviously, there's going to be news coming out of this, which is going to affect the Eurozone in general and overall the euro currency. So this potentially has got a lot of impact at some point today. No idea when. At 1:15 this afternoon, we've got the euro rate coming out, which is forecast to go down by 0.25%. Lagarde has been very upfront and straight with absolutely everything she's done over the last 2 years. As you can see, we do not get shocks from them. The last shock that we had was back in September 2023, where they went up by an extra 0.25%, but we had actually been told that that was a distinct possibility. So it wasn't really a shock, it was a 50-50. Apart from that, they do exactly what they tell us every single time. However, this time, since this forecast was made, there has been a Trump. So the entire economics of trade worldwide changed over the last week. This forecast has been here for weeks. The market has been factoring in for weeks what they think is going to happen. Obviously, we've seen the rally on the euro over the last week, and this could come out at 2.9. I've no idea what it's going to be. So this is going to be, again, potentially a massive impactive move. If it comes out at 2.9 and not 2.65, typically you would expect a massive bull rally. We've just had a massive bull rally, and we're in the middle of a massive bull rally. I don't know whether there's enough order volume left in the opposite direction to actually get a bull rally on. So we'll have to wait and see what happens today, but it's going to be a very difficult day today. If that euro decides to go bull, I'm going to have to cut a lot of positions and take a fairly hefty loss, because there's way too much exposure on the euro south at the moment, and it's obviously not been going south. But it's not just not been going south, as we know, it's parabolic. So we got that coming out, and then sandwiched between that and the press conference, which is where Lagarde is going to lay out forward guidance and tell us why she's done what she's done there, and potentially give us some inkling as to what's going on in there. We've got the unemployment claims for the US, which is a precursor to non-farm tomorrow. So if the unemployment claims numbers come out dramatically different, that will give everybody an idea what's happening with the unemployment rate tomorrow, and we could get a massive move on the US. So today, for the euro US dollar specifically, could be absolute carnage. Not that we haven't seen carnage already. The euro, obviously, as we know, is completely off the charts. The weekly ranges on the euro are 225s and above. So obviously you need to be aware of all of this today. I have got hard stops in place on positions on euro now. I have taken aggressive drawdown control positions, and I've got hard stops in place. If these get taken out before the announcement, they get taken out before the announcement. I'm not risking any more on this euro. It's not playing ball at all. So all of these euros, euro pound starting to come down. Sorry, euro Swiss starting to roll over. We've just got a reversal alert on that. Euro pound, we've had the reversal alert, but flying again this morning. Euro New Zealand, we have had the reversal alert and the retest, and we're basing out at the moment. So this one's looking like it might start to roll over again. Hard stops in place on aggressive drawdown control positions today. Euro US dollar is stuck so far this morning, but that is not unusual. Yeah, it's the norm. So the first move of the day could potentially be where we go. However, I suspect, or rather hope today, what we're going to get is this morning sideways movement and just accumulation ahead of the news. And the news is obviously going to drive it where the news is going to drive it. So we'll have to wait and see what happens with it. But that's today's news. And then obviously tomorrow we go straight into non-farm payroll. We've got Lagarde speaking again tomorrow morning, very early. And then obviously tomorrow we go into the unemployment rate for the CAD and for the US. Whether this is going to have any impact at the moment, I have no idea, because this has got nothing to do with economics at the moment. If there's a load more people unemployed, so be it. We know there's a load more people unemployed because Trump came in and immediately sacked hundreds and thousands of people in government. So if that doesn't go up, I'll be surprised. But anyway, so yeah, we've got that coming out tomorrow as well, and obviously that's a massive volatility. So we've got two major events coming up today and tomorrow that could completely start the profit take move and unwind the whole lot. It could also completely upset the fundamentals of trade for Europe, and we could be seeing this thing go parabolic upwards for whatever. So just be prepared today. These moves are not normal. We just do not see parabolic moves of this nature for no reason. So we'll have to wait and see what happens. Morning outro. So there's no ADR so far today, which is absolute joy to open up the terminal and actually see the market where it was yesterday, because 9 times out of 10 at the minute for the last couple of last week, basically this thing's been lit up like a Christmas tree before I've opened my terminal. So we've got some stability this morning. So yeah, hopefully we'll get some profit taking started at some point. The pound at the moment is looks like that hit a brick wall yesterday, so we attempted a double top and failed. The New Zealand dollar and the Aussie dollar have started a little bit of strength, so all these weak moves we've got are starting to unravel a little bit with the Aussie pairs. So it is all starting to move. It's just this euro. So today is the euro day, and it's either going to be good news or bad news. Regardless of what the news is, I think there's a distinct possibility of an unwinding of some description. Even if Lagarde says, do you know what, we're keeping the rates at 2.9, we can't drop them anymore, and there's a possibility we're going to do a rate freeze for the next 2 months while we figure out how to do defence spending. Typically, you'd see a 200, 300 ADR move off of that kind of news. I don't think it's got it in it. And a lot of analysts are of very much the same opinion. This thing needs a correction. This is a little bit like the stock market rally post-COVID. Yeah, we shut all the businesses in the world. No one could do any trade, and all the stock prices went through the roof. Absolutely illogical. What did it cause? The biggest bear market we've had in history. This seems to be options purchasing on the back of defense borrowing. Defense borrowing is a negative thing. You should not have this much movement when a country or group of countries is agreeing to get themselves further into debt. It doesn't work that way. When they issue bonds to sell to create the debt, yes, but they haven't issued that. So this all seems like speculative buying ahead of what they're expecting, I think, to be a bond sale. Not necessarily going to be announced. So today's meeting is deciding what the hell they're going to do. So we've got a reversal obviously in play. So, we did get some decent bearish price action coming in. We had some the day before as well on EuroOdd. We had another batch yesterday. So we are starting to find sellers in the market. Another downward move and a break of yesterday's kind of New York session lows will quite possibly spook some of these buyers into selling ahead of the rate announcement, or at least use the rate announcement to create the liquidity to do that sell. So we'll have to wait and see. Like I keep saying, and I've said for many, many years, it's always worked the same way. You climb up the stairs and you fall down the elevator shaft, and typically that fall is twice to 3 times as fast as it took to go up. 48 hours, 50% gone, wiped out. Very, very normal. If you look back at normal, any market, that's what happens. Yeah. So it takes a week, 2 weeks to come down. Within 48 hours, we're back to where we were. So obviously this is climbing down the stairs and jumping up the elevator shaft. It's the same thing. Profit take. So it always happens way, way, way faster because there's a panic because your P&L is dropping. So we'll see what happens today. ADRs obviously are flat today. There's no point in looking at weeklies or monthlies because we know it's all over the place. RSIs are all extended still, so things that are massively still extended. Euro, US dollar, although that is starting to come down now. If Trump announces any kind of deal with Ukraine today, bang, that's going to be down. That dollar's going to rally through the roof. It's just about to get a load of free stuff. That's good. So, you know, there's a lot of this move which banks and institutions will be watching like a hawk to press that opposite button to get out because they want to bank it. However, if the fundamentals shift today and the euro turns around and goes, we've decided to do all of our defense ourselves, we're going to fund it with bond sales from France, Germany and Spain. They will be commencing on Monday. That's through the roof. So, you know, we are literally hanging on a thread waiting for a decision, basically. So I can't see it after this because you don't want to be buying up there. You want to be buying the bonds down here. Well, banks will anyway, but we'll see. So there's tons of RSI extensions, but obviously they're all euro. We know that. They're extended, they're embedded, and they've been up there for days. So we're still up there. So we'll see what happens today. The only other extension you've got really worth looking at there is the pound US dollar is still very extended. That is starting to weaken though. So we've had a nice rejection this morning. We've got an inside bar going in at the moment. We're only 20 minutes into this candle, so it's a bit early to tell, but move starting to the downside on that one. So I'm going to go through the zones, have a look at where everything is and adjust. Biggest squeeze I've been in since I started the account. Yeah, me too. Pretty much the biggest squeeze I've had ever, I think. The trouble is, as well, I mean, this is partly my doing, is the exposure. I am overexposed on the euro by a long shot. So, you know, the euro is not the type of currency that tends to get this type of movement. And, you know, this is why everybody's looking at this thinking this is completely illogical. But you've had, when you get squeezes, typically, you tend to get squeezed on a single or a dual currency. So a typical, turn that volume down. I just had the volume up because I was watching the video. So you tend to get squeezed on one or two currencies at a time. So it tends to be something like the US dollar or the Swiss franc starting a rally based off of unexpected news or a shift in sentiment. So you get one thing take off, which causes usually a squeeze on that instrument and all instruments related to that. But when that happens, the amount of either buying or selling that's required within that instrument causes all of the others to move in normal market structure, because you get injections and withdrawals, injections, withdrawals, while one thing is going parabolic. The problem we've got now is with this particular situation is it's not happened before because we've not had Trump do what he's done. So what he's done is simultaneously collapse the stock market, collapse the dollar collapsed the Canadian dollar, and left the rest hanging, which means that the money's flowed out of that into the euro. So you've got 4 squeezes happening at the same time. That doesn't happen that way, not normally anyway, because normally you have a trade balance. So there is a push and a pull, there's a push and a pull, there's a push and a pull. Whether that push and pull is up or down is irrelevant. What we've got at the moment is 4 pulls at the same time. It doesn't happen normally, because you don't normally have one country or one currency decide to simultaneously fire shots at 3 other currencies at the same time and crash their own stock market by strangling their businesses and stopping them doing business with all the countries they've ever done business with, while also trying to steal resources from someone at war and siding with a dictator. Yeah, this is just not normal, is it? So I've never traded through it. I don't think anybody's ever traded through it, in the same way as we never traded through COVID before. But look what happened to COVID. It's a V-shaped recovery. This is all going to be a V-shaped recovery and A-shaped recovery as well. We just have to get through it. And it's about surviving. And unfortunately, I'm over leveraged on the euro. And the euro is the one thing you would expect not to move on what Trump is doing, because at the moment it's not affected. It hasn't got any tariffs. However, the entire continent, which is the currency, has basically been told it's got to go off and do its own thing. It's like, you know, kicking your kid out the front door and shutting the door. Yeah, I don't know. I've never cooked before. What do I do? That's the situation they're in at the moment. What do you mean we've got a war on our doorstep? We haven't built any tanks. That's where we are. So, but why the euro's doing that? Don't know. So banks and institutions have got a lot of faith in, obviously, they're pre-buying euro options to sell them at a later stage. They're going to sell it at a later stage. That's the key takeaway from that. But it's when. You know, that's the thing we don't know at the moment. So we will find out today. Morning, Evil. Just catching up on the live since I'm late. Euro reminds me of the Swiss last year. So I was just looking at what's happening with that trade. We're after a period of extended short on the SNB cut rate for the first time. Well, yes, it's just a squeeze basically. So yeah. Yeah. Don't know. I would have no problem. You know, the market kicks you in the backside regularly. That's a given. Doesn't matter how many, and this is something you learn over many years. Doesn't matter how many times you think you've got it right, it will go, you haven't, and it will kick you. And it's something unusual that happens because all we have as traders is historical data. So New Zealand dollar CAD, pound US dollar is coming down nicely. New Zealand dollar CAD, another extension going in. So yeah, it doesn't matter what you do as a trader. All you have is historical information to go on, and you can say, this has never happened before, but everything's got to happen for the first time. We've never had the world's currency, the leading economy, the biggest military, the leader of the free world, turn around and become a dictator business person, have we? These things you just cannot predict. These are the times where things go bust. The Swiss National Bank removed the peg from their currency. All the brokers went bankrupt. Yeah, I was on the right side of it. Thankfully, if I was on the wrong side of it and I was with a bad broker, I would probably be bankrupt myself now. So these things happen every now and again. These are the black swans. But at the moment, this is just a normal irrational move. Yeah, the market is irrational. It can stay irrational longer than you can stay liquid. That is the saying. So you have to liquidate at some point. But it happens to the Swissy. It's happened to the Aussie. We've had parabolic moves on the Australian dollar before, but they will always undo themselves. This is the thing. These parabolic moves will always undo themselves by a percentage. And it's a case of you can only look at history and go, right, I needed to survive 4 months there. Yeah. So you have to scale in with the intention to survive for the worst case scenario. If the worst case scenario becomes 6 months, you won't survive. That's it. End of story, isn't it? Nothing you can do about that. But pension funds go bust. There's all sorts of things happening in these things, but hopefully this isn't one of those. It's just an extremely irrational market move that will immediately become the opposite. Morning, FTNet. Right, so let's look at the areas of interest at the moment. So Aussie dollar CAD up at the top, looking for sells at the moment. Second sell, sorry. First entry's gone in at these highs. We've pushed up again above those. Canadian dollar still getting hammered. Aussie dollar Swiss flat at the moment, looking for long opportunities, so I'm looking for the lows. Aussie New Zealand not in at the minute, looking for shorts. Not really interested in anything but high quality entries at the moment. Propulsion gap to the upside. Aussie US new short taken, so need a new sell. I'm going to space these out. That propulsion gap is obviously a key level, but I'll go for those highs. I'm just going to incorporate that propulsion gap as well, because we resold that 4 times after we broke at the highs there. So that will be next entry short up there. I've got 2 on that one. CAD Swiss, that was doing very nicely this morning, coming back down again. Swiss franc rallying, or is that Canadian dollar dropping? Let's have a quick look. So this is a rally in the Swiss. Yeah, this is a rally in the Swiss at the minute. And yen, this is a safe haven run. So we're liquidating into the yen and the Swiss, but we do not seem to be liquidating the euro. So what are they liquidating? Canadian. And the dollar by the looks of things. Looks like there's more Canadian weakness coming through this morning. Two cuts this year. So it does look like we're looking at one today, but they're now saying that we're going to stop those rate cuts. So the Swiss unemployment rates come out. That might be responsible for a little bit of that Swiss movement as well. So some Swiss strength coming through, some CAD weakness by the looks of things. So Euro odd. So aggressive drawdown control entry went in on this one last night. Here, it's close together. It's not big, but it's a decent size to bring my average close. Yeah, one news event, one news spike, I'm done. So it's a case of getting out of these, not making a lot of money on them at the minute. Next entry will be going in up there after stopping out on the aggressive entry. There is no zones on this. There's nothing to see here. We're at all-time highs. We're parabolic. This is just an I hate that word unprecedented, because it sounds like a cop-out, but it's that's what we're waiting for, isn't it? Yeah, it's one of these just why type moves. So it's a case of exit. Obvious exit on this is actually now here. So I'll move it there just in case we get the spike. Euro CAD, again, there's nothing to the upside on any of these euros that you can use as resistance. So all you have is to scale in a distance and keep the distance not too tight. So that's half an ADR. I'm looking somewhere between 3/4 to an ADR spacing, just to keep the average as close as we can, so that when that profit take does kick off, there is an opposite, an exit opportunity. This isn't even an aggressive drawdown control position. I just took another trade at the similar level yesterday when we started seeing this rejection coming in. So we had that upside rejection. And as we broke that low, I took another one to see if we were going to start some kind of downward movement that might turn into an M pattern today, but we didn't. We just went basing sideways. So the TP for this trade is placed here, which is in this propulsion gap, which will just bank some money, which will allow me to do drawdown control below the line. So it's all about getting the drawdown control done. So the aggressive drawdown control, that's what it's there for. It's not for profit. It's there to do drawdown control and reduce the overall size. Euro Swiss is coming down, looking for longs on that. There's no way I'm getting involved in this euro until I know what's going on with it. Euro pound, third short in, fourth is going in at propulsion here. So this is an area we tested a couple of times, broke through, retested. So looking for another sell there, but hopefully we won't need it. And we'll get some kind of pullback on this leg before that happens. There's nothing aggressive on that one at the minute. Euro New Zealand. So got two aggressives on this. One there and... No, sorry. Yeah, that was taken with the EA. So I've got one aggressive on, which has the stop there. I've also decided to put a stop on the second entry there in case we get a spike and a run. So I would like to get another trade on up there, but you can see where my exit is on this. If we get a couple of hours of selling, any kind of bull price action on the New Zealand dollar ahead of that news, I'm done. I'm out. So average on this one, easily achievable. I've got a hard TP on the aggressive drawdown control so that if the hard TP triggers, I can immediately just get rid of half of that and be done. That will reduce the exposure in case the euro does start to rally. But hopefully we're just going to get a negative move on the euro. If that happens, obviously, payday. Euro US dollar, have another entry taken fairly close yesterday. The reason I took this one yesterday was just wanted to get a little bit more size on because I saw the euro starting to falter yesterday and I wanted it to be in quick. So stop loss is in place on this trade because it's too close to this one. That will be the next proper entry. So if I do get another one on up there, I will probably stop out on that one. So it's just these trades that were taken yesterday have all got stops on. It's 5% loss gone if they all get triggered. If they get triggered, I don't want them on, obviously. That's what the stop loss is there for. But propulsion, I've got the target down at this high, but obviously it will be a play it by ear day today. It's not going to be a looking for support resistance bounces today. It's looking for exits on opportunity when we get it. So long first taken on pound odd. So this was the accumulation I was looking to take first entry on, which have just got triggered. So next entry is going to be down at that high, this price here. So this propulsion gap, obviously we've got loads of little propulsion gaps down there. So there's a chance we're going to return back down into this high here, which was previous support. There's this little level of resistance here, which we finally accumulated at and broke through. We didn't come and retest it. So that would be the next zone I'd be of interest. If this doesn't become a 50% retracement bounce, we'd be looking for a 61.8 bounce. So putting back down into there. Pound CAD, looking for an entry back at support. Pound Swiss, again, want a deep entry on this one. I'm not interested in taking on too much more exposure at the moment. That is an obvious spot there. So either here or here is a great spot for an entry. But I'm waiting to get deeper on this at the minute. Again, Swiss franc. Don't know how the Swissie is going to get affected with everything that's going on in Europe at the moment. So the reason the Swiss franc is a safe haven and they keep themselves neutral is because they want to be the safe place in Europe to put your money. If you need to place your money somewhere safe, they are not affected by war. They are not affected by anything, basically, Switzerland. They keep themselves neutral. They keep themselves out of politics. They keep themselves separate. So if something goes on, that's where you put your money. There's no backing from the US anymore. Therefore, can the Swiss remain a safe haven, or will they have to be absorbed into the rest of the European area because they are now in trouble because Russia's on their doorstep and there's potential invasion, etc., etc. So I don't know whether the Swiss is going to retain its safe haven status that it's had for the last 30, 40, 50 years, because used to have an ally sitting on the other side of the Atlantic that would back us up. That isn't there anymore. So new world order, and this is what the meeting with the Euro leaders is all about today, is what the hell do we do next? It's like you've just been turfed out of your house. Where are we going to live? What are we going to do? How are we going to pay for it? All change. So potentially, he could be bluffing. He could be lying about everything he's doing, and he could turn around tomorrow and go, that was fun, right? Wasn't it? Okay, pump the stock market back up. Ukraine, you're sorted. Don't worry, we'll look after you. Europe, don't worry about tariffs. We're not going to do that anymore. China, we like you. Let's drop 5% on your tariffs as well. Let's all be friends. You never know. We might have been living in the Matrix for the last week, and he's going to switch the machine off, and we're going to go, really? That didn't happen? You never know. Unlikely, but hey. So we'll find out what happens with that today. Tune in. I feel like a soap opera. Tune in next week, and we'll find out what happens with the Trump zone. Pound US dollar. Nice rejection this morning on the 4 hour. This is the area. So I've got aggressive drawdown control. I haven't put the stops on this yet. Let's do that now. So I've got a double entry gone in here. So this is the normal zone entry that was taken there. Again, we saw some potential movement, which looked like the US might be starting a little bit of a power up. So I took a little entry with a pending order, and then I took another one this morning to get some decent size on up here, just to get that average up. And I wanted the average above that resistance, so that if we are going to get a pullback and we are going to continue bullish against the US dollar, but we get a pullback before the next leg, I need to get myself an exit above that area there. So again, aggressive drawdown control. So putting stops in place on that position, and see if we get a new push down on that one. I need to put sell limit up above there. So stop out, and then new entry will be taken up at those highs. And again, this pound, it's not really the pound, is it? It's the US dollar. There's no reason the pound should be this strong for a start, but obviously this weakness in the US dollar is what's causing that rally. New Zealand dollar CAD rallying again. We're out now again at highs, looking for longs on this one. So I exited the longs on this over the last week. Just no point in trying to get back into it at the minute, not while the Canadian dollar is under these tariffs. It's not going to do very well. New Zealand dollar Swiss, out of that one yesterday. That was the target up here. So looking for longs on it. Obviously this is the logical area to start to look at to get back in. So I'm just going to place an order on this accumulation here, basically. So potential move is a pullback into support and new leg up. However, we are hitting this area here at the moment and reselling this zone. So there is a potential that it's going to come all the way back down there. But that makes logical sense to start getting in on a pullback on this. So that's the entry today. New Zealand US shorts at the highs. Yeah, I'm only interested in total extremes on this at the moment. I'm not taking any more exposure on the US dollar until we have some idea what the hell he's up to. So yeah, if we do rally up into those highs, I'll take a short, because this thing's extended as hell at the minute. So that will come down from there to some degree, hopefully. If it starts to flip-flop around in the middle, I'm not interested. Want some directional indication from it. US dollar CAD, looking for longs. So entry in propulsion. We've got this area here as well, which was double resistance, or rather, sort of that propulsion gap. They rebought it basically, and then we had another leg go in there. So either here or here, you're likely to find some buyers. So yeah, and a nice easy backup down at the lows. So looking for longs on that one, but again, no idea. It's US dollar and CAD, the most volatile things on the planet at the minute. US dollar Swiss, First entry taken, second entry taken on this one this week. Hasn't really gone anywhere. Swiss franc's coming down now. So next entry for me is down in propulsion. So we had this little accumulation here. We had a sell order come in. We resold it. We resold it. We resold it. Then we slammed straight through there. We've just retested it yesterday. Didn't quite get that trade on yesterday. So the zone's still in place at this level. So I'm looking for a double bottom entry to get in. Failing that, we'll be coming back down into those lows. There we go. And the yens, I'm not trading still at the minute. Haven't really looked at these in any detail, but they are all over the place, aren't they? Still. Very sideways at the minute, though. Not really anything you can do much with those at the moment. So we'll see where we go. So there you go. So that's where we are, where we're looking at. We've got really nice stagnation at the moment on the euro pairs. So fingers crossed we get some weakness starting to creep in now. I think today's going to be the catalyst for the moves on the euro, obviously later on today. So 115, that's all going to kick off. Let's just quickly look at the indices. So TP hit on the FTSE, hedged on the DAX. So I was just looking at what's going on with the other account, the other EA rather. So yeah, TP1 hit FTSE. Target to the downside is in last week's low. That's not last week's low, that's last week's low, but it's this area here. So good target today at 125. So we've done ADR today already, look. 125 ADR. Absolutely no buying in that previous move. There are so many weird moves going on at the moment, honestly. Why are UK stocks selling off so hard this morning? There is no news for the UK. Bizarre. It's almost as if the market's completely ignoring everything at the minute, and it just, someone somewhere is just pressing buttons going, let's make that go down to, let's make that go. There's no sense behind anything at the minute. But then again, it's the markets. They're not meant to be sensible. So that previous high there, just see it behind my head there, that is that support. So we will find some reaction there because this was where the sellers were sitting. They all flipped long here. They are, if they are still long, we'll find a reaction. This thing's coming down like a steam train. Look at it. It ain't stopping. DAX holding up very nicely. Obviously, buy European cars. There's no news for this at all. We've got other news as well. I didn't cover the overnight news. It just doesn't seem any point in covering overnight news at the moment because nothing matters. There's too much going on for anything to have a single impact on anything at the moment. You know, just every time you see something, it's some massive negative or some massive positive. But there's two major escalations overnight. First one, Trump and Gaza. So Trump has basically threatened Hamas and said, hand over all the hostages you've got, all the bodies you've got, or we're just going to come in and blow the hell out of you. So basically, America threatening war with Gaza, with Hamas. More like a mafia boss than a leader of a country, but that's how he's decided to do it. We've also had China rumblings about invasion of Taiwan. And the Taiwanese military basically flexing. It's not really going to do anything. You know, it's basically David and Goliath. If China want to take Taiwan, they will just take it. The question now is, Taiwan and the US have always been hand in hand. The US have always said, any problems, don't worry about it. We're going to back you up. Basically, he said that to everybody over the last. America said that to everybody over the last 50 years. Why would he back Taiwan now? He's not back in Europe anymore. He's not back in Ukraine anymore. He's not back in the UK anymore. He's not friends with Canada anymore. And he's decided he's not friends with Mexico. So basically, they've isolated themselves from the entire world, sided with Putin and North Korea. China are also with Putin and North Korea. So it's highly likely that if China does decide we're going to test the waters by pushing a few buttons in Taiwan, they'll be looking to see what Trump's reaction is. If there's no reaction from Trump, they will take Taiwan, which starts a war over that side as well. Obviously, the trade war here, China came out overnight and also said that we are ready for war. Meaning hopefully the trade war, but they said war on any front, meaning that basically, yeah, bring the trade war on. If you keep pushing us, we're just going to nuke you, basically, is what they were kind of saying. Everybody suddenly got very angry, haven't they? Every country's leader is just getting cross. So what's going to happen with that? Who knows? If the US dollar is going to keep collapsing the way the US dollar is going to keep collapsing, we're going to soon be trading in Chinese yuan, because that will be the dominant currency. Because the way the euro is going at the moment, it's about to turn tail and collapse through the floor. I don't know. Anyway, so but there's an awful lot of stuff going on, is my point. And it doesn't really matter what comes out from a news perspective. This is a great chart. This sums up the markets at the moment, doesn't it? Utter chaos. There's nothing strong. There's nothing weak. There is just utter chaos. Yesterday, this thing was on its arse. Now this thing is the strongest thing on the planet. Today, this thing's the worst thing on the planet. Yesterday, this thing was the strongest thing on the planet. Utter chaos. All caused by one orange, yellow-haired, crazy person. Anyway, politics aside, it's good for volatility. If you're trading the VIX, as a lot of people I've seen in a couple of the, there's a couple of groups that I'm in, a couple of trading groups on Discord that I'm in, which I stay in for a laugh because they're prop evaluation ones. And the people trading the VIX, my God, you've never seen so many people with such puffed out chests going, I'm the best trader in the world. I long the VIX. No shit. You made money because the volatility went up. Good luck when the volatility stabilizes. So that is what we've got at the moment, is VIX through the roof. Anyway, so that's where we are at the minute. So we'll see what happens today with the Eurozone. And it's just a case of waiting to see at 1:15 this afternoon. So today's moves likely to be very much like they are. Yeah. Wiki and sitting awaiting Lagarde, basically. FTX, I'm unable to get the POS EA working on some charts. They somehow freezed. Pass. Divide by 0 means that the EA is trying to do a calculation it can't do, which means that you probably haven't got ADR data. So check your history. That just divide by 0, basically all calculations are done using ADR percentages. If you haven't got 10 days worth of ADR, it cannot do the calculation. Therefore, you'll get divide by 0 because it cannot get a result. So 9 times out of 10, that error means you haven't, if you stick it on a 5-minute chart, for example, and you go out and you haven't got 10 days worth of data there, it cannot calculate ADR 10. If it can't calculate ADR 10, it cannot calculate lot size. Therefore, you get divide by 0. So that's probably what it is. So just uncheck the chart. What's that button called? I never remember. Scroll to the chart to the end of on incoming tick and just keep hitting the home button. And that will basically go back in time and load in data. Do it on a couple of time frames. Do it on the 5-minute chart, the hourly chart. This particularly happens a lot on if it's a new MT4 terminal. Some brokers, most brokers, RoboForex included, will dump a load of data into your terminal when it starts up. Some brokers don't. So and I've had some brokers where on some accounts they will do and some accounts they won't do. So you just have to go and load data in, basically. That will be the error. Right, so that's all I've got for you on that side of stuff this morning. Beautiful. Up 27% today. Had a loss day yesterday. About to take a loss on that by the looks of things. Yeah, very nice. Clean FTSE down, money. You couldn't fail to make money on the FTSE today. It'd be very hard to make a loss on that, wouldn't it? But yeah, DAX looks like that one's going to stop out. Basically the same play as this, pretty much. FTSE's killed it. DAX is hedged, therefore we're clean, making money. Right. So this is ORBV2, obviously, which is what I've been forward testing. We're up 162%. This is ORBV3, as I've called it, but it's not going to be called ORBV3 because it's not really to do with the opening range breakout. It is a similar logic. However, it is using, I covered this in the live room yesterday, it's using just volume price action basically to determine ranges. So there's still some logic I want to investigate with this and some testing I want to do with it. But what I'm looking to build on with this is an EA that can be used on anything basically to trade breakouts. So the logic is very simple. We set ourselves a target to reach and we set ourselves a maximum loss, and we trade any volume and volatility and momentum with a standard risk reward ratio until we achieve it. So all this is doing is this EA, it's just basically playing a standard 10% of ADR stop loss based on any kind of breakout that it can find, any kind of range that we know works, and then just trying to basically get a runner. And it will keep on that runner and it will protect the stops and it will basically close the whole lot out when it achieves the target, which will be whatever you want it to be. So this is kind of the evolution, if you like, of opening range breakout. You can, with this, I can make it just trade the opening range because I can set the trading times to be 9:45 until 10:30, and that will just literally look for standard definition ranges within certain sizes between 15 minutes pre-market and 30 minutes in, which is basically what ORBV2 is doing. So what this is doing is it only goes until 30 minutes in and then it stops operating. That's it, it's done. So the difference between this and this EA is this will trade as whenever you want. It will just go on all day basically looking for ranges to break. So how does it define a range? It's over a period of candles. So all it's doing, ORBV2, this, is it's looking for a minimum maximum range. So it's the same logic as stock index hedge. Yeah. So we have a minimum range and a maximum range. So it's exactly the same logic as SIH basically. You have down here entries for, where are we? You can't see, can you? You've got entries down here for 5-minute ORB, 10-minute ORB, 15-minute ORB, 30-minute ORB, and a 60. Although I don't use the 60, it doesn't work. But that's the logic of ORBV2. ORBV3 is very much the same, except we're not using time. We're using bar 1, bar 2, bar 3, bar 4, and bar 5. And I'm only using bars 1 to 3 at the moment. And a minimum maximum range based on average daily range, which is basically an interpretation of volume. So what we're doing is we're just saying, whatever time frame you put this on, it will go, was the last bar that closed inside the Goldilocks range that I like to trade? If yes, bracket it. If no, have a look at the last 1 bar and 2 bars and see if that is within the range that I like to trade. If so, bracket it. If not, look at the last 3 bars. If not, look at the last 4 bars. If not, look at the last 5 bars. So basically you can trade any time frame, any range with it, basically. And it's about just taking momentum breakout. So all you're doing is you're saying, find me a range that typically is not too big and not too small. You don't want it too small, because ranges that are too small means you're probably going to do that. Yeah, if you think about it, what is a range? It's an accumulation, right? What does it do when it's in a range? Stay in a range until it doesn't. So if you say, oh, I found a lovely range there, it's nice and tight, I'll wait for a breakout of that. If it just sits there and goes sideways for the next 6 hours, all you're going to do is you're going to stop out for 6 hours. That's not going to work. So what you need to do is look at the average daily range of the instrument, which is what we use, which is why we use ADR. So we want to find something that is not too big, not too small, but can be broken and still have enough room left outside of the range to move so that we can hit a target. So all this is doing is basically that. But the difference between the ORB and this is in the logic of how it operates. It's looking to try and bank an amount of money. So I'm looking to lose no more than 2,000 in a day, and I'm looking to make 2,500 in a day. But what I'm going to do is I'm going to check every 15 minutes, 30 minutes, hour to see how we're doing, because what you don't want to do is limit your upside. Yeah, this is a breakout strategy. So in a breakout strategy, there's two ways to play a breakout, which we've covered in the member streams before. You use a standard risk reward. So you'll risk X to make Y, and as long as Y is bigger than X, a positive R, you'll make money. Yeah. However, we see over and over and over again, prime example today, there's our range, okay, there's our risk, there's our reward. We're just going on, we're just carrying on. So don't take that. Take something maybe, or put a protective stop in place, which obviously is what SIH does. It protects the capital and it protects the profit. But let the thing run. If it wants to go 10 ADR today, go 10 ADR with it. So what this does is it checks on a periodic basis how much profit we've got. So it's saying, have I got 2.5 grand? Every 15 minutes, see if this is 2.5 grand. If it is, shut it. Because I'm not going to give it back. I don't want to give back my 2.5 grand. If I've got 2.5 grand in open P&L, it's zero. It's open P&L. I can't spend open P&L. So every 15 minutes, have a check. And what this allows the strategy to do is, if you're wrong and the trade doesn't work out, you're out straight away. And then we look for a new opportunity to set up. And it will probably be trying to go the other way, because that way failed, so let's have a crack that way. But we'll wait for the range to form and wait for an area that we know we can actually make some money from. If it breaks and it goes really fast, don't get out there. Get out every 15 or 30 minutes if it's still going. And you'll see these P&Ls, well, like we saw in the testing. If you saw me doing the testing in the live room yesterday, at the end of the live room, we had days where we were making 10 grand. Because we got a news event in our direction after we'd broken out. And the news, basically, it went, I'll check in 15 minutes. Oh, we've got 10.5 grand. I'll take that. Because our downside is limited and our upside is unlimited. Therefore, your P&L will go like this. Yeah, with these lovely big spikes, which are caused by momentum. It's a momentum breakout strategy. So that's what it does. But the beauty of it is there is no time. So with the ORB, the biggest problem with ORB in backtesting is time differentials. We have this thing where we change the time on the clocks, which is really annoying. So whenever you're running any backtests, you have periods of weeks where you've got your EA set up to trade at 2:30 p.m. in the UK, because that is 9:30 a.m. in New York. But when the clocks change, you need to be trading at 1:30 p.m. But the EA gets in at 2:30 p.m. or vice versa, whichever way the clocks have gone. So all the results for those weeks, and it's not many obviously, but it is weeks, are wrong. The other thing we have a problem with the opening range breakout strategy is, which is what the SIH EA addresses, That's not worked. Yeah, that doesn't work. Okay, so it doesn't work. Why has that done that? I just noticed that's not the desired functionality at all. It's not meant to be doing that. Anyway, so yeah, the other issue we have with ORB is which SIH fixes is that if we have one of those opens like this, where it doesn't really do anything at the open, you tend to get killed. So what this EA does is it goes, well, if it's doing that, I'm not interested. I'll wait. The problem with ORB V2, which I have found as I've been forward testing it, and it isn't a case today, but it is a case quite often, is you get 30 minutes of nothing, therefore you just don't trade that day. But at some point in this day, it will suddenly go, do you know what? I'm going off now. And that is where we are going to take our trade, when the momentum reaches the market. So we're reliant on the ORB happening. If the ORB doesn't happen, our edge disappears. What this does is it addresses that by saying, if we haven't got an edge at the open, fine, we'll wait until we have got an edge, which was 3:30, 4:30, whenever. News days, for example, tomorrow, non-farm payroll. The stock market open will be like that. It normally is, because we're actually waiting for non-farm payroll. So, or rather, no, it's not non-farm, because non-farm is 1:30. On other days where we've got news, so the PMI days, for example, where we've got news coming in at 3 o'clock, you tend to find the stock market open is very quiet, because we're waiting for PMIs to come in to see whether the dollar's going to be bullish or bearish. Because if we want to buy stocks, we want the dollar to go bear. If the dollar goes bull, we'll buy them immediately. So you tend to get the movement starting at 3 o'clock. So 2:30 to 3 is dead. So we will wait until 3 o'clock, and then we'll wait for the momentum to start forming, and then we'll trade that momentum. So this is what this does. And the other advantage of this variation, which is why I'm kind of not thinking of calling it ORB, because it's not, it's just a breakout strategy, is you can use this on anything. In FX, if the market goes sideways at the open, or from 7 o'clock in the morning until 10:30 in the morning on the pound US dollar, we'll just wait. And when somebody decides to buy a load of pound, we'll get a range put in that we can trade, and then we'll trade that momentum, whichever way it goes. But we're waiting for the volume to enter the market. We're waiting for the momentum candlesticks to go in before the ranges start to be analyzed. So you can have periods where the market goes sideways all day long and just sticks within 20% of its average daily range, and you just won't trade because you can't, because there's no momentum. You can't make money if the market doesn't move. If the market's going sideways, stay out. On breakout strategies, obviously, if you're a mean reversion trader, you'll be selling the crap out of it and buying the crap out of it all day long, making an absolute fortune. But how many times does that happen? Yeah, so it stays range bound most of the time, but those ranges are never contracted, usually. Yeah, that's why did that do that? Good test, this. That is completely the opposite of what I wanted it to do. Should never place a sell limit order. Anyway, so yeah, so that's basically what this is doing. So the back tests, you know, are phenomenal. Don't think I've actually got this set up. I've no idea what this is doing. I think this is just default settings. So seems to be all right. This is on an account. This is the account I did all the testing and development on. So I've literally just ported the EA over here. So I haven't even checked what the settings are, but it works. So as you can see, what it's doing is it's just trading, and it will trade any time of the day, not just at the open on the DAX here. So we got trades going in at 10 o'clock in the morning. We got trades going in at 1:40 in the afternoon. We got some taken at 6:45, 7 o'clock at night. We got a close got in at 9 o'clock there. You know, so it's just trading whenever it wants to during the day when the market moves. Yeah, so it's kind of a variation, if you like, on ORB, but with the realization that it's not always the open that makes those explosive moves. We know that 90% of the time it is, and it will still trade those. Yep. So, you know, prime example on this live test that I'm doing now is trading the DAX because the DAX is moving. It's not trading the US markets because the US markets are not moving. If suddenly we get a spike on the US markets, though, it will start trading the S&P 500 because people are trading the S&P 500. So we want to be in when the market's in, and we want to be out when the market's out, because when the market's out, we tend to get chopped with breakout strategies. This is specific to breakout strategies, obviously. Yeah. If it was a mean reversion strategy and there's nobody in the market, we want to be mean reverting because that's what it's going to do. But in breakouts, they're momentum strategies. So it's kind of the evolution, the step on, if you like. There you go. So that's just made 80 grand in a year. I don't know. What's the test over? Yeah, a year. So that's just done 80k profit in a year with a 20% drawdown on the account. So, you know, that's basically what this variation is doing. But what I want it to do, which is what this test here is trying to do and failing, is to run everything from a single chart, so that we are looking at the overall picture here rather than looking at an individual. So the test that I've just done there on the DAX was just the DAX. So that made 80 grand on the DAX, only trading the DAX. If you throw other instruments in there at the same time as the DAX is moving, and they move equally as well, you'll be banking that profit much faster. Your losses are always going to be limited to the downside, but your profits can be exponentially bigger because we're going to get to that 2.5 grand target, or whatever target you set for the account size. And if you've got two instruments moving well at the same time, what you're actually going to find is when it does that 15 or 30 or 60 minute check on the P&L, it's going to not just be 2.5, 3, 4 grand. It's going to be 6, 7 or 8 grand because you've got double the amount of movement in your direction. So if you stop out, you stop out at a fixed lot size, a fixed risk. That's it. We're stopping out at $500. We won't lose more than $500 on the trade. But if two break out at the same time, that's when it's going to kill it. And that's the thing that you cannot test, because I can run this test on the pound US dollar now, which I'm running here. Liz Truss. No, what's that? Jesus, that got hurt. But you can run the test on this. You can run the test on the DAX. You can run the test on the Nasdaq. You can combine those together to show you what would have happened if you'd have treated every single one of them individually on its own chart using its own P&L. But what I'm interested in is what would have happened if I'd have just used all of the instruments together to make one daily trade, which gave me a profit target. I want to see that result, and you can't do that test in MT4 anyway, apart from doing it live. So the first thing I've got to do is I've got to forward test this to make sure this logic works, which it's not at all. Make sure it's working properly, and I'll do this on a 1 minute chart so that I can take, you know, tons of trades at a time. But and I'm going to need instruments that are moving, so I might need to start incorporating some other stuff in here as well. So gold. What else we got? Put the yen in there. Let's put some Aussie and some Swiss and some CAD, some New Zealand dollar and some CAD. There we go. So I'm just introducing a ton more instruments into the list, basically, just to make sure that it's trading. And I want to see basically how it's drawing the ranges in, how it's working. Oh, that's getting murdered, look. Obviously not good settings for the pound US dollar. So yeah, so basically that's basically what it does in a nutshell. So it is designed predominantly for the indices. So it's this strategy, and again, I'm not throwing this strategy out at all at the moment. Yeah, it's done 160% in 5 weeks. It's up to 27 grand, I think. The account started at 10, 25. We're up to 25k in a matter of weeks. So, it's 150% increase. So I'm not throwing this strategy out with the bathwater at all. But what, as I said, I've noticed with this strategy is there's so many opportunities for profit taking which just get thrown away. Yesterday was sitting at, I think if you look at the live room in the morning, we're 1800 up. We ended up 1400 down because we decided to trade this session. These sessions did very nicely, as they have this morning. So, sitting here at the moment on $2,355 profit. If this thing now collapses through there and dives to the downside, and this thing pushes up and goes up there, that'll be sitting up at 5 or 6 grand. But you can give that back in the afternoon. Well, you can't actually because it's got a limited downside, but you give a big portion of it back. And that's what I'm noticing with the ORB strategy and this strategy is it overtrades. So the whole purpose of this test is to stop that overtrading and try and get rid of it. But yeah, it's I haven't done any optimization on this at all. It all works on ADR, so it doesn't really matter what instrument you put it on, it's going to be dynamically adjusting to volume. But for times, obviously, I've decided to start with the DAX in the morning. So starting the Dow in the morning might well be a bad thing to do. And if it is, then we will start the Dow in the afternoon. And it might be that they do need to run separately and independently, and they do need to be combined as a portfolio and not as one whole trading portfolio at the same time. And if that is the case and that's what the findings are, then that's what will be. But I want to do this testing to find out what the what the advantage is. Trades like this where you're seeing these big downward curves, this is likely because they're trading the Globex session and there is no volume in Globex, so it does get a little volume spike every now and again. Where's that downturn there? Yeah, see, this is trading. All these trades, all these losses that are going in here are going in before the market open. So it's tried to do all of this trading before the market open. It's lost all of it pre-market. Yeah, it's probably not the best thing to do, is it? But again, we need to test. Covering it nicely though. So basically the same as ORB, but just breakout, not opening range. Yeah. So yeah, I mean, I don't know if it's the best thing to do or not. 15-minute range. So yeah, I mean, it obviously needs more testing. So let me just see if we are taking any trades on anything else. What else did I put that on? Pound US dollar. Pound US, Euro US, gold, US yen. I'm going to do that, am I? Euro. So Euro, gold, US, Aussie, New Zealand. New Zealand dollar CAD. And the other one. What was the other one? Aussie Swiss. That was it. Just want to monitor that and see how it does. So that's the plan for the testing on this. I'm happy with the way that ORB V2 operates. Obviously, it's I've tested this to death as it is on individual currencies, and it works incredibly well, but it does hand back a lot of money. So my goal is to try and find the Holy Grail, which is basically a set and forget, never touch EA. That's what the version 3 is trying to become. This version is still, days like yesterday. If that was real money yesterday, I would have stopped trading and not traded New York. If I was up $1,000, followed by 2.5 grand, followed by 1,800, I'm not trading anymore. Yeah, that's my mortgage for the next quarter just paid. I'm not going to jeopardize that. I've just bought a nice holiday for a week to Center Parcs with the kids this morning. I'm not going to trade New York this afternoon. Yeah, so this is the sort of thing that the EA cannot do very easily, because it isn't you, it isn't me. So this is all fully automated, completely untouched, in the fact that it's just getting in, it's hitting the targets, and it's leaving all the trades in place. But it's when it gets to, I think what it kind of needs is it's like a sanity check, which is what I'm trying to build into this version 3 is, we're just about to open New York. How are we doing? Oh, not too bad. Okay, you've got to still define what not too bad is. And not too bad needs to be based on what's happened in the past, obviously, because if you've got 3 losing days in a row and you're up 50% of your week's losses, it's not too good, is it? So there's got to be logic in there that knows what's going on in the account in general as well. That's where your kind of sanity comes in. When you're looking at your P&L like this and you've got 4 red days out of 10, you don't trade anymore. You're done. This is it. You're done for the month. I know, there's 16 grand there. You're done for the month. Don't touch it. So that's kind of what I'm working on. It's not something that's very easy to build logic into, unfortunately, because it's quite complex algorithms running, because it's got to make decisions, and it's impossible for me to write the algorithm for everybody else, because I'm writing it for what I would do, and whether I would do the right thing or not is different, isn't it? So I'm trying to implement an AI. Yeah, basically. It's not an AI, it's just logic. Yeah, it's just common sense. It doesn't have to be intelligent. It just needs common sense. So you look at this day here now. So if this was real right now, and this was me right now, and I have got these trades running, but not to this extent, I'm cancelling this off, and I'm cancelling this off. Yeah. Because I do not want to take those. I've just made that. Why jeopardize it? So what could happen now today is this 2-3. I have a choice. Cancel these orders off. Don't trade those, and walk away with that right now. That's option number 1. Option number 2 is, let's see how the rest of the session goes. We'll see if we can get some more profit here. And if it triggers that, we'll get some more profit there. That's option 2. Option 3 is we trigger this and it stops out. We trigger this and it stops out. And that becomes 1,000. That's option 3. Option 4 is incorporating one of those options, plus also trading these this afternoon. Do you see the different number of combinations we now have? You can use option 1, option 2, or option 3. Those are your 3 options this morning. Your 4th option is to multiply these 3 by these 3, giving you X permutations of possible outcomes today. Which decision do you make? Which is the best one? Is it best to stay where we are because of yesterday's results? And what do we do if yesterday's result was positive? What if it was only 500 and you wanted 2 grand? What's the decision you need to make there? We're up overall that much on the week. Have you got a weekly target? Has it been achieved? What decision should you make today based on whether that has happened? Which is based on whether that has happened? Which is based on whether that was big enough yesterday or not Do you see the problem? There is no AI that can make that decision because it's intelligence. It's you. AI cannot tell what you want to do as a human being because it doesn't know what your debts are, your mortgages, your payments are. It doesn't know how much you've made this month, this quarter, because this is just one account. There's too many permutations. So all I'm trying to find is a general best practice, if you like. But this could be fine-tuned in 1,000 ways. And I have fine-tuned it in 1,000 ways. And every outcome becomes a positive. So again, it's always the problem when you find a strategy that works, which is why I use the ORB, because it's a determined edge that's been around for decades. But it also has 1,000 different permutations that work. And there isn't one that works. There's lots of them that work. And this here, if this pops to there right now and does that, what's going to disappear off of that 2,300 is $370. It's going to bring me back down to $2,000. So the way I'm sitting on at the moment, $4,500, for me to take a $300 risk right now on that breaking and making me another grand today, I'm happy. But I'm only happy now. If that is a stop out, and then this one is a stop out, I'm going to end up being down by whatever, 1,200. Then when it comes to the afternoon, I'll be looking at these 2 days combined going, I'm in a loss. I need to trade these sessions. These sessions turn into losers. That outcome number 4 that I just chose, or I chose outcome number 2, followed by outcome number 4, because outcome number 4 is only happening because this was a stop out and that was a stop out. If this had been a profit and that had been a profit, outcome number 5 would be the choice. You cannot make that decision artificially. You can, but are you going to turn around and just blame the AI because it got it wrong? If it makes a loss today, is it your fault for letting the trades go? Is it AI's fault for getting the decision wrong? Because AI cannot see into the future either. Are you going to get a clean break this afternoon on these 3? Unless you can answer that question, you don't know what to do either. But what you do know right now is that is money. You can spend it. I can pay the mortgage. That's it. So, that's always going to be the holy grail, isn't it? Something that you just put on a chart and you do not have to touch it, and it just prints money. This is as close as you get. But it was also going to have losing weeks. We had one here. Yeah. Followed a massive week, losing week. Mediocre week, pretty good week, pretty good week. Don't know what next week's going to be. But if I keep mucking about today and that turns into a negative, this week's going to be bad, isn't it? So do you stop trading now? What about tomorrow? What's your weekly target? Yeah, all these things can be programmed in to test what is roughly the best thing to do to squeeze out of the market. But there's a billion combinations. So, and it looks like we're going to trigger south on the DAX as well. Look at this, NASDAQ. Woohoo, we're short. We're in the pound US dollar, look. So the pound US dollar has just triggered a trade. Aussie dollar Swiss, we've got a trade ready to trigger as well. And that's a 10-minute range. I need a log of this. I need to log this because I have no idea why it's taking these and whether it's doing it right. This is the problem with this is why I don't like single instrument EAs that trade multiple instruments, because you're trusting the logic is working here, but I have no idea what the range is, minimum, maximum, volume. I haven't got any data. I need the data to be able to verify whether that should have gone short. That's why it's a little bit annoying. Need some kind of logging. Just had a alert go off. Pound Swiss ADR. Really big move coming into the Swiss franc at the minute. Euro Swiss is about to trigger as well. Euro odd is holding. Euro CAD is holding. Euro pound is holding. Euro New Zealand is holding. Euro US is holding. Reverse alert just gone in as well. Almost got a 15 on it as well. So we are holding on this euro. We're not moving today, are we? So yeah, so there you go. So that's what I'm working on basically at the minute. And obviously I'll keep you updated on it, but it's not a 5-minute project. Somebody asked me the other day, when's the ORB version 2 coming out? As you can see, it's evolving. So this thing right now, I can release right now, but I haven't got enough confidence in this at the minute because I'm seeing stupid mistakes. So it will work exactly as it is working right now, but I think it can do better. So I'm trying to build in at least some inputs to work some of this logic. And then obviously it can just trade the normal ORB strategy easily by setting time constraints on it. And if you don't want time constraints on it, let it run. But I'd like to get it done once and for all properly rather than try and do this and then do something else and then because end up just developing forever basically, which is part of the job. But I'd rather release something or use something myself that I don't want to have to tinker with really much anymore in the future. So there we go. Any questions on anything today so far? Be lovely to see a reversal start on this. We're holding the low of the day at the minute. Euro New Zealand were breaking down today. Just running into this move yesterday that they rebought, which they're buying again. It's just going to be a holding pattern until 115, isn't it? Be lovely to see a drop. So 150 ADR spike today. I'm done on that. Half an ADR and I'm done on that. Euro pound 1.25. Euro Swiss, I need. Oh no, I'm not in that. Euro CAD 1.5. So looking for 1.5 ADR ideally. Drop on the euro today, and that is all done. Which would be nice, wouldn't it? We will see. So hedged on the DAX. So DAX exit today. 5R target hit on the FTSE. So all done. So DAX hedge exit today is very difficult. Upside is 125 ADR 5R. So I'm just going to leave that in place. Monthly high bounce is 5R to the downside. So again, leave that in place for a monthly high bounce. Although I'm sure it's going to hold, to be honest. But we'll see. So that's downside target on the DAX. Right, that's it for this morning. No one's got any other questions? Nice and easy. If you have, let me know now before I disappear. So 1:15 this afternoon, be watching the euro, obviously, and we'll see where we go. And then we've also got, obviously, US in between the press conference. So the press conference is where Lagarde is going to lay out her forward guidance on this moving forward. So we'll see where we go from there. But I don't really know what is going to happen today because I think the whole euro rate announcement is going to be overshadowed by this because, that doesn't matter what you do with interest rates if you've suddenly got to find another 500 billion a year. That the interest rates are going to be completely irrelevant because they're going to change. So this is what we need to focus on really today and see which comes first, really. One of them is. Hopefully it's the rates and we get a spike on it so I can get myself balanced and then wait for the euro decision and then decide what the hell to do with the euro. The market obviously thinks it's going long, so we'll see. It's still weird with my divide by zero error. When I close and reopen the chart, it works with the standard settings. Once I load my set file, I get the error. There's an error with your set file then. Check your set file. There's something wrong in your set file. You'll probably find, if you look at the settings, check the manual. So you'll probably find you've got something silly somewhere, like a negative where it should be a positive, or a positive where it should be a negative, or something like that. It works before the update. Which update was that? Yeah, I mean, just check your settings, because there's obviously new settings in there. So there may be a setting that conflicts with, maybe that you've got a setting conflict. Basically, the easiest thing to do is load up defaults. Yeah. What I do is I take a screenshot of the settings. So just take a screenshot of your settings, stick it over to the side, load up the EA with defaults, and then go through and just set it up exactly as it was in the old one. Yeah. And you're going to go, oh, that input's new. I didn't have that before. Something will be conflicting somewhere, maybe. So this is new, multiple of ADR stop calculation. Yeah, so you didn't have that input before. That is a new input. So if you're risking money over ADR, you know, it's something like that. But if you're having a struggle, do that process first. And if you still have an issue, send me your set file. I'll load it up and run it in the back tester, or I'll also stick it on a demo account on 1 minute chart and just change some RSI settings or something so it triggers some orders, and I'll check it on mine as well. But no one's put it this way, no one's mentioned any problems. I've not got any problems. So I'm not saying there isn't a problem, but I don't know what it is. So I haven't got anything to go on, basically. Those errors, the downside to MT4 and MT5 is pound yen, pound Swiss as well. Pound is Oscar Mike this morning. Oof, God, thought the yen had just gone the upside. So big strong yen. So this is definitely a safe haven run. They are running into the yen, running into the Swiss. Worried. Market is worried. I suspect it's worried about this. What was I going to say? Can't remember what I was going to say. But yeah, I've not got anybody reported any problems, and I've not got any problems. But if there is a problem, obviously it's likely to be one of the new settings conflicting with something. So there may be, when I do development and new functionality, I test all the new functionality. And if the new functionality's got any kind of impact on old functionality, like lot sizing, for example, with the new lot multiplier, I will test that as well. But I can't test every single combination of settings. So it might be that there is a setting somewhere that is broken. But that error message, that's what I was going to say about MT4 and MT5, the error messages they give are quite often utterly useless. So it is a kind of, oh, you've got a zero divide error on this line. Well, all this line does is calculate lot size, and lot size is being calculated correctly. Doesn't help. So you have to go off and find the needle in the haystack, basically. So there will be odd settings that I just would never use that you might be using, and I've never tested. So I need to know about them, because obviously I need to fix them, but it's trying to track them down, really. But no one, people do mention that error every now and again, and it's always ADR. And the one thing that has changed in the EA is the ADR. Yep. So that is a new input. Multiple of ADR for stop calculation. That was defaulted to 1. You didn't have a choice. Now you can change that. And obviously you can delete stop losses as well. So you can use all of this as an ADR multiple rather than over 1. It is now over whatever you fancy. So if yours has loaded it, yeah, it is a double. So try that. Also, if your broker doesn't allow minis or micros, well, if it was working beforehand, it will work now, because that hasn't changed. Basically, what I did is when I introduced that input, I set it to what it was defaulted to. So it was defaulted to 1 in version 2 or 1.8 or whatever it was before. So version 2.1, it's exactly the same input. All I've done is I've made it a variable rather than making it a constant. So nothing's changed. But if you're loading a set file, it might try and load something weird in there. I don't know. It shouldn't do, but that doesn't mean it can't happen. This is MetaTrader as well, don't forget. It's software in general, it's not just MetaTrader. Right, I'll leave it there. Anything you need, let me know. Good luck this afternoon with the euro. Obviously, just if it goes the wrong way, it's cut it day. So you have to draw a line in the sand somewhere. Mine are hard stops. So, you know, if this does go the wrong way today, it is taking losses. Yeah. So there's nothing we can do about this euro move. It's just chaotic. So we have to wait and see what happens. But good luck with it today. It does look like it's starting to roll. So I'm hoping the banks are seeing that they do need to get out of some of this now. And obviously, at any point, we could have any member of the euro leadership coming out and saying, this is what we've decided. And it could be catastrophic. So this could go absolutely anywhere today. So it's one of those days. All right. And tomorrow's non-farm payroll as well. So chaos reigns. I will leave it there. Anything you need, let me know. Other than that, I will see you tomorrow, hopefully. All right. Have a good day.